Very good morning, friends. I'm Nalnakshi Swami. Welcoming to my channel Smart Index Edge. I'm on the chart of call option and the put option. Many traders trade the buy call option or write the put option. Write the call option. That means selling the call option or the selling the put option. Actually, what I used to see on the underlying chart for the compression to get the expansion. But of late, I started understanding that is not the thing, real thing, what I need to look at. I need to look at the compression on the premium charts, option premium. Only option premiums will tell you the story whether the underlying is going to move or whether the underlying is going to stagnate or the expansion and everything. Here, in this one chart, see the chart over here. I have applied the chart of call option and the put option, and this is my indicator, dual option premium engine. That is Nalini dual option premium engine. It plots instantly. If you click on the indicator, if you click on call option, it automatically picks up the its pair. Now I am on the chart of, I have picked up 24,300 call option. It automatically picked up 24,300 put option. For the comparison, look here. Look at this chart. What is happening? Same strike, same expiry, trading at completely different prices. They were trading at the completely different prices here. You can see put was different, trading at different price, call was trading at different price. But every once in a while, they come together. Their prices actually meet right there. Here. This is the price is meeting point. Both of the call option, put option were meeting together, and finally you can see this indicator plots the baseline, balance line. It is saying CE is 124.75, that is green color. It is indicating that CE is dominating. You can see over here the price of the call option to be 141. See, but it is not random. And once you understand why this expansion and compression convergence happens, then this one line can tell you when the market is about to make its next move. Here, the compression, convergence, and it leads to expansion. That is the phenomenon which happens in the market. But we are unable to track this if we are only on the underlying chart. For this, everything, even the call premium and the put premium only reflect the underlying price movements. Then I thought I must code for this. I created this indicator. This is dual option premium engine indicator, so that you can visually see these pairs were apart. They started coming together. It was a divergence. It is the convergence. So it is tracking the call premium and the put premium of the same strike at the same time, right? You can see the grid zone also. I have added a grid indicator, not grid indicator. Right click. I have selected the chart setting to a grid, and I have added grid indicator pivot for this call option premium and the put option premium, yellow color pivot. You can notice when the price is diverged, this is the base grid line for the put and base grid line for the call option. And what do you notice here? When the call option premium is it's above its pivot. Simultaneously, when they were apart, this put option premium is losing its balance pivot. Then the grid line, it is showing bearish and it is bullish thing. Even though intermittent red colors things are coming, but you know that you are in a green zone for this call option. Let us put a green zone for this call option. It is the green zone. And it is red zone in the call option because put is coming down. So put is coming down. That clearly indicates that underlying Nifty underlying is going up, right? This is divergence is nothing but the call minus put. That is this one. This is the level. This is the divergence, what is happening. This is divergence. Divergence will not sustain. So it has to come and it has to balance. Now it is balancing. Here comes the trick. Here comes the trick. What happens in the market is when it starts balancing, that is a compression. You might have seen in the market whether it is in the, I'll take you to the underlying chart. Let me zoom it, duplicate and show it to you. Underlying chart, let me apply the underlying chart. Nifty. Okay. If I apply the underlying chart, see, the price is moving. Here is the catch. It stops. Price stops after moving here, here at that period. See, you can say 10, it was between 10 to 12, 2 p.m., the market stayed in a range. At that period, the premium started decaying. 10 to 12 started decaying, they converged. Okay, here after the convergence, around 2 p.m., the price is dominating towards the upside. Nifty dominated towards the upside. You can see simultaneously, it is in the 15 minutes time frame. You are not going to see properly. So you can see the price started moving. I came down to started moving apart. The premium baseline was 121. The put option lost the balance and it is moving towards, and it went to the 107 while closing, and it moved towards the from 121 to 140. This is an opportunity, friends. This is an opportunity for you people to enter into the buy position or buy position of the call premium. If you are a buyer, you can see, and this indicator cautions you with the yellow and purple. Purple background is the extreme compression. Here, when extreme compression is happening, you are not, many traders tend to enter into this zone without knowing compression is underway. They tend to, it will become choppy. Both the call option and the put option will be choppy. The price levels will not stay stagnant. They will be very, very volatile. And at that period, if you enter, definitely nobody is going to win. Only after the completion of all this compression, divergence comes, divergence came, started moving here. The beauty of this indicator is it plots the baseline, and also it becomes, the beauty in this midline is it plots green if the call option is going up, or if it plots green if the put option is going up, or it will be in a neutral black color one, and if it becomes yellow, which is dominating here. That is the beauty of this. This is an imbalance. Imbalance happened. The put option diverged so much on the previous day, 145. This was an opportunity for an option writer, 24,300. If he would have written this put option, okay, they could have gained so much of money to the balance point. Suppose if a person, by seeing the reversal signal, the indicator automatically shows you the grid indicator. I've added grid indicator, so it is showing you reversal of this is based on the price action. You can cash this call option around 68 simultaneously. You can cash the call option, buy the call option, sell the put option with the hedge. You are going to simultaneously three things you can do over here. Three things to be in your favor. Three things. What? You can sell the put option. Okay. You are selling the put option at this level, 189, and buying very out of the money put option, very cheap, hedging with 10 rupees, hedging with nominal this one. You are selling the put option, you are writing the put option to protect yourself when you see the reversal here, because this is the divergence. At that time, three things we are doing. We are buying the call option here, and because the pivot price is above the pivot, right? And price is way below the pivot, the put option. This is the base grid line. And price is above the base grid line here. Since I am on 2 minutes chart, you are going to see like this. And you are going to close your position, this position, when it starts converging. This type of action will fetch you money even though you are wrong. See, only buying it is choppy. Here you are protected, the premium is going to decay. And you have noticed, whatever you have noticed in this indicator, it marks the base grid line and the base pivot point of the put option. It has lost its pivot point, and this call option is above the pivot point, and the divergence we are utilizing for selling, and the convergence we are closing the position here. And also you can go for a naked call option buying when it starts diverging, and you can if the premium is very good, you can go for. This is the thing what happens in the market, on and on in the market. So that's why I coded for this indicator. Let me go to the 15 minutes time frame. You can track so well here. If you go back to the history from the 15, this put option was losing. You could have sold the put option here and it started losing premium. Here you are not going to buy the call option. It is single side. You are doing this because the call option has not turned positive. And both are in the sell mode, bear mode. Call option and the put option, they are coming down. They are coming down. It is clearly visible. On 16th, the premium was 336. You are selling with the minimum edge for the margin benefit, and you are, see, they started diverging over here. Even though they are started diverging over here, this is a short covering rally for the put option. So you need to close your position at this when both they start. See, yeah, so many things you can make out with this indicator. So this indicator, a yellow thing, it is showing this compression, initial state of compression is happening over here. And when the compression is happening over here, divergence is coming. They have not met at the common point. It is not a deep compression or anything. So they are compressing over here and divergence is coming, and you are entering into the direction of the put option. You are buying the put option, selling the put option, buying the put option. Here comes the catch. You could have done this because put option lost its balance over here and it was diverging. You can see the difference. This call option was in the bear mode, it turned to a bullish mode. See, all the picture you can see in this indicator, just a glance you can see. Again, you can make out. See, the put option was dominating. Call option was call option was falling down, right? And then put option and the call option came together, but there was the call option did not move up. It started diverging over here, and the put option dominated in the market. Put option, even though put option premium came down, they are not converging with each other. And notice here, this is the pivot line of the call option. Pivot line of the call option. The call option is below the pivot line. There is no question. And even here also, this is the pivot line of the put option. Both of them had been sold and they started diverging. The put option dominated on this day, on 15th, around 12:15. 12:15. So visually, everything is clear, and with the pivot lines, with the compression background, and deep compression with the violet background, they have most of the premium. They have lost their premium, both the premiums, right? The premium of the call option was losing like anything. It came down to 45. Now from 45 to 141, this is the place where you can enter into the market for the buying of the call option, and you are in the sell mode. Here, these are the areas you are indulging in buying of the put option, right? And here you are started selling the put option, and this indicator will caution you it is they are not converging at it. Here they are finally expiry is nearby. This is 21st July call option and the put option at the level 24,300. Market has crossed the 24,334. Now these option premiums are converging. Now we need to see which one it is expiry nearby. So everything will be clear with this indicator. It is very easy to trade option premium engine, and I have taken care of everything, and it also plots the baseline. See, when they started converging, extreme convergence, the violet color is coming. When the violet color is coming, when they are losing the premium, both of them are losing. At this point, you just a hero zero, you can do with a very low premium, you can do that. And while going, you saw that underlying expanded, call premium expanded. That's why 123 baseline call premium expanded to 141. That is while closing time, you could have played for some scalping trade on the premium. So that's why in this way you will get the idea. With the underlying chart alone you cannot make out. I used to see previously for the compression on the underlying, and I used to guess with the applying differently on the different panes or different segments. I used to apply the call option and premium. Applying call option, put option premium on the different chart layout will not solve the thing. You cannot compare it very easily. This becomes a comparison of expansion and compression becomes very clearly when this indicator plots together. This is how, and also I've taken care of the trend. You can see the trend over here. The call option started losing even though both were at the bear position. You can see, notice over here in this area, still put option was in the bear position. Call option was also in the bear position here. Later, here, no convergence, not much of convergence. They were apart. Even they are apart, this grid indicator, I have combined the grid indicator, it started showing the put is gaining premium to the upside. That means Nifty was falling down on 12 p.m., around 12 p.m. on the 15th of the. So the premium put option matched, and notice here, just it reached the level which which had got, because these are the instruments, decaying instruments. They decay with the time, but they even see they trapped. Actually, these were this put option trap, and probably some people, if they would have this one put writers, they will trap this is a trap which happened, and the put premium. So in this way, you can benefit with this indicator. The clarity comes into your trade. Clarity how to, when to exit. Suppose when you are short, you can immediately close your position. Suppose I have sold a put option over here around 327. When this call premium starts in the bear position, you are going to, when it starts turning, you can cover your short around 199. From 336 to 199, you are covering your short, and again you get an opportunity. You can see the difference over here, difference on this day, the out of the money. When Nifty was started at 24,000, and this is 24,300 call option. By seeing this pair, you could have taken the call option at this bottom, or you could have entered at this 73 rupees. You would have caught that the low price, and you could have till the convergence you could have kept it. But when everything is conducive for the call option, see, the price is above the base grid line, pivot, everything is favorable for this, and you could have sold comfortably the put option. You could have sold comfortably the put option. See the premium, it lost so much. The premium of 266 lost to 110, and the premium was very minimum, primitive premium, 39 rupees rallied to 141. In this way, you could have captured the 0 0. 0 0 blast doesn't happen at once. That is the misconception which is happening on the traders. It is a process, friends. Gamma, this is the gamma area. Gamma compression, extreme compression is the gamma area. Gamma blast takes place. Even you can notice on the underlying reversal, and you can gamma blast is taking place. Yes, friends, this is how you can trade better with the help of this indicator. If you want to subscribe to my indicator, this is a very unique indicator. I can say uh, I am the first one to create this indicator. I googled it on um, to see whether this concept has been disclosed on the YouTube or anything. People do not come out and tell the, even though they knew it, only elite, some traders, they keep it secret and they give it as and tips for the traders. But whatever you give the tips with the invention of the algo system, when most of the trades are happening with the computers, algo automated system, it is highly impossible. But for me, with the invention of this indicator, you also people can trade. Traders without any automation can trade better because I've considered that visual. The light travels more and I captured the colors, trend change, everything for the trend change. So it captures very quickly because light travels very fast. So we can compete the visually with the color change, we can compete with the algo. That is the basis of this. So friends, you can, if you want to access my indicator, you can message me on this number 9845209600. This is my WhatsApp number. This is a paid indicator. If you are serious only, you just message me. Serious buyers can message me. So you will get the details of the pricing and everything. Thank you very much, friends. Nalinakshi Swami signing off.